Hello and welcome to the CNBC TV 18 special India 2020 Stars. That's from the Axis Capital Conference. Joining me from the sidelines, Dharmesh Mehta and Nilesh Shah from the Axis Capital top team. Gentlemen, good to see you again and thank you very much for joining in. What's the mood, Dharmesh? It's been a terrific run these last 3 weeks. Is India emerging as a bit of a favorite in the emerging market basket for investors who are attending your conference?
Well, Udayan, it's been a great mood, great year, and I think that this is just the beginning of the bull market we are seeing. And yes, India is the top favorite. You can see the performance of India has been the best in all the emerging markets and the developed markets. So India is the destination to be right now for all global investors.
Nilesh, what do you sense? I mean, are we just benefiting from a big relative global trade, or in absolute terms there is a lot of upside that you can see, given that the numbers at the earnings level or even the macro level haven't started delivering that kind of pace of acceleration?
I mean, today we are having the benefit of both the things, global factors as well as local factors. Globally, investors are finding other peers like Russia avoidable because of Ukraine crisis, Brazil avoidable because of the recessionary persistency over there, China avoidable because of the credit concern and growth concern. So within that, India appears fairly bright. Inflation is on its way down. Interest rates are expected to come down. The current account deficit, the fiscal deficit seems to be under control. And the growth, which is not yet up to the expected level, is on its way up. If not in FY15, certainly FY16 looks far brighter. So we are benefiting on every global strategist radar, saying that India is a must-invest market. And in terms of flows, we are seeing good amount of flows now coming across all variety of investors, long only, sovereign, and momentum. Locally also, while the earnings have not yet picked up the momentum, the expectations of earnings for FY16, I mean, that momentum is fairly high vis-a-vis FY15. So valuations looks little bit higher side. But looking at the expected recovery and growth and the TINA factor in the global market, certainly this is the time to be invested into the market.
Dharmesh, why don't you give us a little bit more color on the kind of flows that we've been witnessing, the kind of investors who are attending your conference, where this last bit of money actually came in from. That would help us understand what vehicles of money are actually putting in money to work in this global relative trade that we just spoke about.
Well, Udayan, if you see, the FIs have been positioning, India is in their portfolios right from March, expecting the government to change. So a new government coming in play was already expected from March onwards. Hence, a lot of long onlys, the quality high, longer term guys who invest for 5 to 10 years, they actually invested in March, April, May, build up to the elections. And post the elections, as you've seen, the FI flows have not been that high compared to what it was pre-election. And that is primarily because people had positioned for this election before the results came out. And post that, there has been just been topping up by those long-only investors. Plus, as Nilesh mentioned, we had a lot of pension funds and global funds started putting money into India. And overall, India has become a favorite emerging markets basket. So the weightage of a lot of index-based funds also has moved up for India, which was very low pre-elections. So you're seeing a mix of all kind of investors globally which are coming in. And as far as our conference is concerned, the same thing. We've got long onlys, hedge funds, pension funds, long-term pension funds which are more than 10 to 15 years to invest in India coming in, and huge participation by private equity players also in anticipation that there's a lot of new paper going to hit the market in next 1 or 2 years. Hence, they're also coming and looking forward to meet those companies and understand them better at the conference. So overall, I think so we've got a great response as expected because of India has also been the hot favorite and from all quarters.
What about local participation, Dharmesh? What are you seeing there? Because we've seen some encouraging flows into mutual funds. How much of a floor do you see that providing to the market in the months to come?
I think so. Domestic mutual fund flows have started moving up, as you can see from the inflows. And now is when you go out socially or when you're talking to people, you can literally see the left out feeling. So I think so the continuance of these funds coming into the domestic mutual funds is going to be actually is going to be larger now than it was earlier, because it's now that Indians have started believing in this whole India story, which earlier only foreigners were betting on from last few years. So I'm very bullish on the local funds, local flows also, because they're just coming in now.
Nilesh, do you expect to see or hear a lot of chatter about possible rate cuts in the next few months in India, the start of a bigger rate cut cycle? Because some of the factors seem to be coming into place for rate cuts to begin in 2015. What do you hear from attending clients on that side?
Undoubtedly, if I look at the corporate sector, they are looking forward to rate cuts. They are looking forward to not only the policy rate cut, but also actual rate cuts in the cost of borrowing. Now, we believe the cost of deposit for banking sector will start softening because of the overall liquidity which is present in the system. And from the days where we were minus 50 to minus 100,000 crore negative on liquidity, today we have become on the plus side. So certainly there is liquidity in the system, and that liquidity will keep overall interest rates on the softer side. And despite policy rate cut not coming through, there will be softening in terms of overall cost of lending to the borrowers. If you look at the market participants, clearly they have taken 10-year yield to now 8.20%. It is pricing in some amount of policy rate action to happen pretty soon. And this 8.20% yield have kind of withstand despite the open market operation announcements by the RBI. So if I look at corporate sector or if I look at the market participants, they are all preparing for the softer interest rate policy ahead of the policy rate cuts, and hopefully RBI will not disappoint them as the specter of inflation gives them the elbow room to cut interest rates going forward.
What is your best guess of when that rate cut cycle may start?
My feeling is that we are looking at the data, and RBI has mentioned certain targets for Jan 2015 and Jan 2016. Till November, the base effect of inflation will keep inflation on the softer side. And RBI would like to see the behavior of inflation, especially in December and Jan. And if probably Jan target of 8% CPI is achieved, and they are sure that it will move towards 6% by Jan 2016, then somewhere after Jan 15, either looking at the budget or looking after the budget, they should be in a position to cut interest rate.
Dharmesh, what's the excitement level about the budget? Because most global investors did not regard the first budget of this government too seriously. There was too little time to do anything meaningful. But have you already started seeing a lot of expectations about the February budget? Is it a big event now that the market may be building up to?
Well, within whatever people say, end of the day in India, the budgets are big events, and especially for this government, because this is going to be like first budget for them, technically speaking, where they can do what they want to do. Because last budget was just stopgap budget, which they had just come into the government. Hence, they didn't have any time to do some things what they would like to do at that given time. But this budget, definitely people will look at with a lot of more expectations. But they might be able to do a lot of things before the budget and lower down the expectations. Like you saw, the oil deregulation has already come in. Key appointments have happened. The rate cut, as Nilesh said, it may happen before the budget. So a lot of those kind of labor reforms have already come into play. So they may dilute the budget in that sense, because they would have done a lot of things even before they enter into the budget period.
What is on top of the list of people who are attending a conference in terms of expectations from New Delhi? People have been patient so far. It probably would be fair to say that they would have expected to see a bit more by now. But now with the state elections out of the way, what do they want to hear or see from New Delhi over the next 8 to 12 weeks? What do you hear investors talking about the most?
Well, obviously people want this whole oil sector and power sector reforms to unfold, and the government starts acting on whatever they have promised on that front. And that's why we have Mr. Piyush Goyal opening our conference, and no better person to talk to the investors on what government is planning in that sector. And I believe that is definitely a huge expectation that India will be able to resolve this crisis right now, or the things which have not happened because of a lot of legal processes and government action. I believe we are going to go into a phase when you're going to start hearing on all those sides. And We are hoping that Mr. Goyal clarifies on all that front. I believe that is the key thing. When does the capex cycle start? When does all these legal issues on coal, power get resolved, and we can move to the next, next section of the bull market, wherein people start seeing money putting on the ground by corporates and India moving forward. So I believe that expectation is huge, because on the other front, government has already started announcing a lot of expectations which investors had. But this is where it's still the puzzle is not solved, and maybe hopefully this will get solved in the next 1 or 2 months.